G'day everyone! Welcome back to our channel. Today, we're diving into a topic that's crucial for anyone living or doing business in Australia, the Goods and Services Tax, or GST. If you're a business owner, consumer, or just curious about how taxes work down under, this video's for you. Let's get started. So, what exactly is GST? The Goods and Services Tax is a value-added tax of 10% on most goods and services sold or consumed in Australia. It was introduced on July 1, 2000, replacing the previous wholesale sales tax system. For consumers, GST is fairly straightforward. When you buy a product or service, the price you pay includes GST. For example, if you buy a shirt that costs $50, you're actually paying about $45.45 for the shirt and $4.55 in GST. The business then passes this GST on to the Australian Taxation Office, or ATO. Now, let's shift our focus to businesses. If you run a business in Australia, you're required to register for GST if your annual turnover is $75,000 or more. For non-profits, the threshold is $150,000. Once registered, you must include GST in the price of your goods and services, collect it from your customers, and periodically pay it to the ATO. Here's where it gets a bit more complex. Businesses can also claim credits for the GST they pay on business-related purchases. This is known as input tax credits. For instance, if you're a cafe owner, you can claim credits for the GST you pay on coffee beans, milk, and other supplies. Let's say your cafe collected $10,000 in GST from customers over a quarter. During that same period, you paid $2,000 in GST for supplies. You only need to remit the difference, which is $8,000 to the ATO. This mechanism ensures that GST is effectively paid by the end consumer, while businesses act as tax collectors for the government. Now, what about exemptions? Not everything is subject to GST. Some goods and services are GST-free, meaning no GST is charged and no input tax credits can be claimed. Common examples include basic food items like bread and milk, some medical services, and education. For instance, if you buy a loaf of bread for $3, you pay exactly $3, with no GST included. On the other hand, if you buy a soda, GST is included in the price. As you can see, the GST-free status is designed to make essential goods and services more affordable, especially for low-income households. But remember, if you're a business dealing with both GST-free and taxable items, it's crucial to keep accurate records to claim the correct input tax credits. There are also special rules for certain industries and circumstances. For example, exports are generally GST-free to make Australian goods competitive in the global market. Charities and not-for-profits may also qualify for concessions. If your business involves exporting goods, you won't charge GST to overseas customers, but you can still claim input tax credits on expenses related to those goods. This helps keep Australian products competitive abroad. Finally, let's talk about compliance. Businesses need to report their GST obligations to the ATO through a Business Activity Statement, or BAS. This is usually done quarterly, but some businesses may opt for monthly reporting. When you file your BAS, you'll need to report the total GST collected from sales, the GST paid on purchases, and any adjustments. It's essential to lodge your BAS on time to avoid penalties. Many businesses use accounting software to manage their GST obligations, but it's always a good idea to consult with an accountant or tax advisor to ensure you're compliant and maximizing your input tax credits. And there you have it, a comprehensive overview of GST in Australia. Whether you're a consumer or a business owner, understanding GST is crucial for managing your finances and staying compliant with tax laws. Thanks for tuning in. If you found this video helpful, give it a thumbs up and share it with your friends. And don't forget to subscribe to our channel for more informative content. If you have any questions about GST or suggestions for future topics, drop them in the comments below.